Good morning. If you just joined in, go ahead and get signed into your server. We're going to wait a couple minutes and then get started. If you have any questions or concerns about anything that we've already gone over, please ask me. We're going to wait about 2 more minutes, then we'll get started. Hi, good morning. All right. Perfect. Oh, no problem. Did you get to work last night? Oh, okay.
We were unusually busy.
Uh-huh. Well, that's good at least. Uh-huh.
But I am gonna need to sit with you either on breaks or after.
You're what?
I do know how to sit with you and get maybe some coaching in person.
Okay.
On a couple things.
Uh-huh.
So.
And you know that when Lisa comes back from her trip or whatever, you could schedule a time with her too and come to the office.
Yeah.
Okay, cool.
I know that you'll have a technological advice for me on it.
No problem. Yeah, just ask me because what we'll do is we'll end the actual. Let me double check because I may or may not have a call right after, but let me just make sure.
Okay.
Yeah, so I have a call at 1, and I'm hoping that we're going to be done at about 12:30 today.
Yeah, it shouldn't be
perfect.
Too long. And I can kind of show you what. So remember how we talked about the Phoenix?
Uh-huh.
I brought.
Oh,
an example,
perfect. Uh-huh.
And I want you to tell me if it's going to be worth it.
Okay, perfect.
Okay.
All right, awesome. And then go ahead and just get signed in, and we'll get started in a few minutes. Thank you, everyone, for being so patient. Did you want a Red Bull? Everyone in the fridge, if you want one?
Yeah. Probably be very helpful at this point. Yeah, I didn't go to bed until almost 2.
Oh, wow.
No, I have to do it again because today's our definite busy day.
Do you always work weekends?
Yes.
Oh, okay.
Well, and I went to Vegas last weekend.
You're welcome. All right, just let me know once you're signed in, then we'll get started. We're actually done with our packets, by the way. Everything else that we'll be going over is just, you can watch my screen for pretty much majority of it. And then just so everyone's aware on live or in person, all of these classes are recorded on YouTube and they've already been saved on YouTube. Also, you can look at my past classes on YouTube as well. Hopefully in a few months, we'll be back to doing live trainings in person. And then just so everyone's aware, I went ahead and pulled up today's calendar. So we'll be going over a lot of different reports, orders. Actually, we went over orders yesterday. So purchase report, usage report, key item report, automatic pile levels, import, and prime cost. Did you already get signed in? Okay, no problem. You're fine. All right, perfect. All right, we're going to go ahead and jump in. So yesterday I went over orders in the food systems. Today I'm going to be going over importing. So what I'm going to be doing is a couple different things. The first thing I'm going to be doing is pulling up an import just to show you. Now, actually, let me pull up another one as well. I'm going to pull up an actual Cisco one so you have an idea of what the differences are. All right, so if you have, for example, a Cisco account center, and the reason why I use Cisco as an example often is just because a lot of our members do use Cisco, but make sure you have a Cisco account center, and if you do, you're able to export your orders and import them into the system. When you pull directly from Cisco account center, make sure, because Cisco has ecisco.net too, that one's completely different. That's for your orders, your purchase orders. So this is what it looks like right when you export it out of Cisco. What you would want to do is the column names always have to be the very first column. So you're going to have to delete that very first column. And then with Cisco, Benny Keith, US Foods, what they do is if I look at column M and column N, you'll see that we have a split column and we also have a case column. The split where it says, for example, shrimp and it's 18.43, that's a catch weight. So what you would want to do is you would want to go ahead. Actually, that's the split price. Hold on one second. Wrong one. Give me one moment. Because that's actually an old Cisco. So Cisco, just the heads up, they just changed their login twice in the last couple months. Or not their login, the format of their actual exports. So let me see if I can find a more recent one. Because what Cisco will do, or Benny Keith or any of the other vendors, is basically what you'll do is you'll have two columns. One's for your quantity, the other column's for your catch weight. But you're basically going to, let's just pretend like these are the two columns. You would basically have to transfer the catch weight amount into the actual quantity column. So that's what you'll have to do for your bigger vendors, or make sure they're actually under that column, because some vendors you have to manually enter it. Or if you aren't able to go ahead and pull an Excel spreadsheet of it, what you can do is you have a couple of different options. Just know that we do have the option, if you are accounting with us, that we will enter your invoices for you if you just send us a photo of it. Or if you'd like to pay for that, we can go ahead and do that as well. Pay for just the invoices being uploaded on our side. So just a heads up, those are some options for you. What we're going to be doing is we're going to go ahead and import into the food systems. So I'm going to go to food systems and I'm going to go to import. And you can, again, just watch my screen. Like I said, majority of this class, or all of this class actually, is going to be just watching my screen today. So I'm going to scroll down, and earlier yesterday, actually, I spoke about product import, price update, price compare, and order import. So price compare is if you have a purchase order in the system. So if you sent them a purchase order directly from Restaurant Systems Pro to your vendor, that's going to be price compare. If you want to go ahead and import your order after it's been delivered, that would be under order import. I'm only going to be showing you order import today, but there's only one difference to price compare versus that one. The only difference is you'll have an order attached to the system. The first thing I'm going to do is I have to create a new configuration. So under order import, I'm going to click on manage configuration. And then from there, again, your configuration is mapping out your Excel spreadsheet to the columns in Restaurant Systems Pro. And you only have to do this one time for each vendor as long as the column names stay the same. So I'm going to click on the plus sign on the bottom grid. And then from there, I'm going to click on select files. I'm going to go ahead and import one that's called import price compare. And before I actually import it, I also want to show you that specific Excel spreadsheet. As long as you're able to provide us with these columns, then we're able to import. The product name, brand, SUPC is what Cisco calls the vendor product ID, the case or the extended price, the quantity, as well as the pack size. The most important part about importing would be the SUPC. I believe Restaurant Depot, you are able to import, but I'm going to tell you guys this right now. The most important part of importing is your vendor product IDs, and Restaurant Depot changes their vendor product IDs on a weekly basis. So what's going to happen if you try to import a Restaurant Depot receipt is it's going to basically duplicate all of your products. And we want to eliminate that, so it's easier just to manually enter a Restaurant Depot, for example. All right, so going back to Restaurant Systems Pro, under template name text box, I'm going to go ahead and type in the vendor name. And then from there, make sure it is orange and it's saved as an Excel workbook. I'm going to click next. So again, we're mapping out the columns to our Excel spreadsheet. The first one is going to be our vendor name. That's going to be Cisco. Oops, give me 1 second. I'm in the wrong restaurant. All right, vendor product ID, again, that's called SUPC from Cisco. The pack size column. This Excel spreadsheet specifically has two. So on the left side, I'll select pack. On the right side, I'll select size. Under the product name column, that will be description. Brand is brand. Order is your quantity. And then invoice extension is your extended price. So your configuration should look pretty much like this, but may have different column names. Once that matches up and you verify that everything's good to go, you're going to go ahead and click save. From here, I can actually import my invoice now. So all I have to do is go back to that main import page, scroll down, and then under this drop-down box, again, we're going to select our configuration. It's the same exact thing that you would do for any of these as well. I'm going to select my file. And then lastly, I'm going to click on import order on this page. So I selected my file, selected my configuration, clicked on import order, and it redirected me to this page. So up on the very top, the first thing I like to do is enter the vendor name. And I also like doing the date range as well, so it's easier to find. Now I'm going to select my date of order and my delivery date. If you don't know the date of order, but you know the delivery date, I just do it 1 day before the delivery date. So we order for Thursday for Friday delivery. If there was any new products or any products that were made inactive on this specific invoice, it will tell you under the type column what it is, if it's a new product or inactive. And then under the action column, it's going to give you an icon. It's a plus sign to go ahead and add a new product into the system. On the bottom, these are all the products that we're able to import. When the top side is blank and the bottom has all of the products, that means that we're good to go. There's no new products on this specific invoice. If you have contact information for your vendor, it's going to automatically be checked off under send notification to vendor. Make sure you deselect it so you're not accidentally sending them a second purchase order when you've already received it. Now we're going to click on create order. And then what you would do is you would want to go ahead and click on manual price compare. So it redirects you to that same manual price compare page that we were at yesterday. Now, the difference between yesterday and today is I do not have to touch anything up on the very top as long as I made sure my catch weight items, if there was any, had the catch weight quantity and the price reflected the catch weight quantity. Other than that, this should be the total cost before, this should be the cost before any additional cost. Now what I'm going to do is after I've verified my invoice, I'm going to scroll down and click on add the plus sign under additional cost. And then we're going to add a sales tax. So under the description, I'll type in tax. You don't have to add a description. The reason why I do is because it applies to paper goods on this specific invoice. And the cost, I'm going to go ahead and put it as $2.50 for tax. When you hit save, you can enter all of the rest of your additional costs, if there is any, fuel surcharges, whatever it may be, keg deposits, keg credits, bottle credits, whatever it may be. And then this should be that total cost, including any additional cost. Once you're done, make sure you go ahead and click on Update Invoice Log on the bottom grid. And you have two options. Again, if you have multiple locations, you can generate invoice number for transfer, and you would want to do the transfer in the original location that you're taking it from. For our example, I'm going to go ahead and do an invoice number since this is not a transfer. Enter the invoice number, and then once you're done, you're going to hit save. So huge difference, although all you're doing is adding additional costs and clicking on a couple icons. Honestly, it takes me about 1 minute to import from start to finish an order. It takes me a good, I'd say 15 to 30 minutes, depending on how big the order is, to manually enter an order. So if you can, ask your sales rep if they can provide it to you in Excel form. If you don't feel comfortable asking them, feel free to give them my phone number or give them your actual coach's number and they can talk to them as well. Also, for example, Shamrock. So Shamrock is a vendor and they're actually not able to give it to you in Excel spreadsheet directly from their website, but what you can do, and what I've had people do in the past is they actually were able to give it to you in Excel form every single time you receive the delivery. So they'll send it to you via email. So it doesn't hurt to just ask your vendor because it just will make your life a lot easier. Any questions or concerns? All right, so that's how you import an order. Now, again, what you'll see is under daily paperwork, because we updated the invoice log using this icon, now it will be in the invoice log and it will have an order attached. So there it is. When I double click on it, I can scroll down and I can see there is an order attached here. And then that means that we're tracking everything line by line. So I'm able to track everything down to the exact weight. Usage and purchases. What I'm going to do next is I'm going to go ahead and dive into the usage report. What I'm going to do also is pause my screen. I'm going to sign into a real restaurant real quick. And we're going to go over their usage report. Now your usage report is going to show you a couple different things. One, the biggest thing is ideal versus actual usage. Again, what you rung up in your PMix report, your POS system versus what you've actually used according to your inventory and purchases combined. Again, the calculations to everything is your beginning inventory plus your purchases minus ending inventory to give you actual usage. Under food systems, I'm going to go to usage report. Now, I will say the usage report is super simple to understand, but I will say you may have to watch a couple videos or do this on your own a couple times for you to fully understand it and grasp it. All right, just like any other report in our system. So under usage report, you're always going to be looking at this 1 week behind. So as soon as I entered the 14th inventory that night or the first thing the next morning, I'm going to start looking at my usage report. So what I do is I work with the consulting members, but as you guys may know, I've transitioned to a different position as well on top of that. And with our consulting members, we look at the usage report every single Monday or Tuesday for each client. And I want to make sure that you guys go ahead and do that on your own as well. So up at the very top, I'll select the date range. Now, if you guys are either integrated with us, this client is integrated with us that I'm in right now, but they are also have been manually importing it too in the past before the integration happened. So what that means is we can go ahead and click on File Import. We can select their PMIX report. You can see for the 8th through the 14th. Now, one thing is we're pulling the usage report Sunday through Sunday or whatever ending day of the week is, but you're actually pulling the PMIX report Monday through Sunday because the system will do the math for you for the extra day. I'm going to select it by checking the box and then clicking on OK. Am I talking too fast? Okay. Now I'm going to click on Load Report. So there's a couple of different things that I want to mention about the usage report before I show you how to actually start looking at it. I'm going to minimize some of my columns too. So we have our product name column and you can see all of the groups. Again, grouping is the most important part besides making sure that your products are good to go of your actual product section. And that way in the actual usage report, in inventory, in recipe costing cards, you'll only have one product that generates instead of having 5 different sour creams and having to figure out which one in inventory, which one was last purchased and whatnot. Under the category name, so this shows you your category name. Also, another great thing for you is I always sort by category by clicking on the little funnel icon. And when I do that, I'm able to automatically identify if there's a paper supply item, for example, in the actual coded to the cost of goods sold for food. The only time I will code something that's paper supplies to food is if it comes out with that dish every single time. Doesn't matter if it's for here to go. For example, hamburger, if I sell a hamburger plate, does not matter if it's for here to go, and I give them a toothpick with that, then that would be applied to your food cost. That could be applied to your food cost. That's up to you at the end of the day. Now, if it's something that's either or, like sometimes it comes out with it, if it's only for here, and then if it's takeout, it does not come with it, then I would leave it as supplies. So you want to be able to make the own decision yourself for those kind of products. We have the vendor name and we have the unit size column and the pack size column. Your unit size column is the most important. So it's honestly, I'm trying to get them to actually take this pack size column out because it does confuse people. I only focus on that unit size column when I'm looking at the usage report. And the reason why is if you look at this item, it's 1 pound for $5.30, but the actual pack says it's 40 10-pound average. So we can ignore this pack size column. I'm just going to minimize it completely. So right over here, we have our beginning inventory and our ending inventory. Honestly, most of the time this column's cut off and looks like this, depending on how big you or how zoomed in you are on your actual computer. But just know the left side will always be beginning. The right side will always be ending. We have our price column. Our price column is always going to reflect that unit size column. We have our extension column. This is going to be the most important column to filter by. This is how you're going to filter. Always filter by ascending first and then descending. We'll get to that a little bit later. Actual usage is going to be your beginning inventory plus your purchases minus ending inventory to give you the actual usage column. And your ideal usage is what you rung up in your POS system. The variance is the difference between the two, and your waste sheet column comes from your waste sheet itself. All right, so that does feed into each other. So what I'm going to do is explain to you how I actually read this report. First thing I'm going to do is under the extension column, always sort by ascending first and then the descending. Ascending is your negative items, and then the descending is going to be your top used items. So the first thing I'll do is click on ascending. Once you select that, then we can actually start reading this report. Now, this restaurant, I have gone over all of these products with them already. And so here's the thing about this. You can see under the extension column, they're $4.77 negative for chocolate syrup. For any of my consulting members or any of my members in general, our goal is going to be the $10 mark. Anything above the $10 mark, we're trying to fix. That's negative. Anything below it, I just leave it as is. It's not worth our time to spend 20 minutes looking for something that's $4, unless it's a bunch of $4 items. Now, for this restaurant, you can see we hardly have anything. I will say, if you've never done this before, you're probably going to have, I'd say, 20 items that are negative, and it's not normal, but when you first start doing this, then you'll probably have a lot more. So just a heads up with that. So we're going to look at this first item together. This first item is chocolate syrup. It's 24 ounce bottles for $57.24. We started with 0. We did purchase 1 case, but we ended with 1.03. So where did that decimal come from? We grew by $4.77. This isn't the best example since it's just $4.77, but you'll be able to see items that you grew by. And then what you do after that is you try to fix it. So whenever I'm on a phone with a client, I have about 5 questions, standard questions that I go ahead and ask them. And majority of the time, those questions are going to be the reason why that item gets fixed. So one of the questions will be, is your beginning inventory wrong? Is your ending inventory wrong? Are we missing a purchase? Is it a grouped item? Did we miss it in inventory completely? All right, give me 1 second. All right. Next item is shortening. And then again, just know, I know it's only a $4 item, but we're just going to go ahead and utilize it since this specific report has already been looked at. So we start with a 50-pound case for $43.39. We started with 0.06. We purchased 0, ended with 0.15. Also keep in mind, if I have a batch recipe costing card that has shortening and is being inventoried, that feeds into the usage report as well. All right, and then also I do understand that sometimes we simply cannot fix the item. So what I do instead is, if we cannot fix it, I'm not going to get fixated on that one item. I'm going to have you just focus on it the next time you do inventory and make sure that you double check the count of it. Once I'm done fixing all of the ascending, your negative items are going to higher your food cost. Once you're done with that, that's when you can start looking at the descending. Also, please note all of these little arrow icons or V icons are your filter icons. So once we switch this to the descending, this is going to be your top used items. This means that this specific restaurant, no matter if their sales are higher or lower, that these items are going to be consistent throughout the weeks. The more that I look at this with you, or the more that you look at this yourself, is the better you'll get of understanding your exact products. For example, this is a restaurant that I've worked with for over a year now, and so I can automatically identify when something is off, and that's where I want to get you guys at. Now, a couple of different things that we look at. For example, this ground beef, this is always going to be their #1 used item. Also, let me backtrack to that. The only time that you'll really have something that's new on the top list is, for example, this restaurant does catering. And when they do catering, they'll buy the exact amount from that vendor and use all the product completely. And so they'll start with 0 inventory. They'll purchase a case or 2 cases, whatever it may be, end with 0. So that sometimes we'll have an item be on the top of the list. But what you're looking at is a couple different things. Again, you would be looking at the unit size column in the prices and making sure that those match up, but you're going to be focusing more on the ideal versus actual start part of it. And when you're looking at ideal versus actual, it's pretty amazing. Obviously, I can see if I'm over portioning or whatever is happening to my actual product, but I'm also able to identify if a recipe costing card is wrong and get that up to date. So you're not only fixing your food cost, you're fixing your recipe costing cards that feed into the other parts of the system too. So this ground beef, they're 60 pounds over, 60.25 pounds over usage. And then if I scroll over, they don't have their waste entered yet. Beef fajita says they overused it by 40 pounds. So once we identify an item that may be off, so for example, these items, they are going to be over portioning. And another example would be for beef fajita, for example. This client actually figured out that their beef fajita was being overcooked. And what had happened is it would drain out all of the meat because they're overcooking it, which makes it have a different weight to it. And so it wasn't like they're over portioning it, it was that they're overcooking it, and the weight amount actually changed that. All right. But what I do is, because these items are consistently like that, I mean, we know as to why. I don't focus on this specific restaurant on those 2 items, but I would go down the list and focus on something else. Like, for example, there's something wrong here. It's either my recipe costing card or my inventory. The actual from the inventory, it says that we used almost 300 pounds, but my ideal says we only used 80 pounds. That's a 200-pound difference. So where did that go? And then, like I said, I have already gone over this report with them, but let me see if I can find an example. So here's an example, and I actually know as to why this specific item is off, but I'm just going to pretend like I don't. So this is 6 half gallons of margarita mix for $49.10. They started with 0, they purchased 4, and they ended with 0.66. It's saying that ideally they should have used 0 of it, but they actually used 3.3. And so if 3.3, if you know that you did not use that much, then we need to double check our inventory, or we need to double check if this item needs to be grouped. For this specific restaurant, they don't count any of the janitorial supplies or paper supplies in general, so we can skip over that one. And then you would continue going down the list. Ideally, I would like it to look like this. And obviously you have your bad weeks, you have your good weeks, but like for the example, cake, they start with 2.45 cases. They purchased 2 cases and then with 2.45 as well. They actually used 2 and ideally should have used 1.79. Now they're only 0.2 off in their extension. This extension column is how much you've actually used, is only 128. So I'm not too worried about this one since it's only 0.2 off. I would be more worried about an item like, let's see, like the margarita mix, the shortening. Now, shortening actually is accurate. The shortening, because they don't put it in recipe costing cards, that's why ideal is 0. Or your fryer oil, you probably don't put that in a recipe costing card. I've never seen anyone put it in a recipe costing card because you shouldn't have to. But that's going to automatically be 0 as well. But when you see a 0 under an item that you know for a fact that you use, then there could be a couple of different things that means. That means that it's either that original product or that group is not being used in a specific recipe costing card, so the ideal is 0, or it has the wrong quantity. And again, this is what helps you go back and double check your recipe costing cards. And I showed you guys yesterday the actual MPG report and how you could identify automatically, even if you're a back the house person, that, for example, your food cost for a specific recipe said 15%, that I need to look further into that specific recipe costing card and make sure it's accurate. Another example is the shrimp. They started with 0, they bought 50 pounds of it and ended with 0. From here, I would go ahead and filter. The first thing I like to do is filter for shrimp and make sure I don't need to group it. If I don't need to group it, I will go ahead and ask them, did you guys really end with 0? Did you guys have them in any pans in your restaurant? Were they prepped out and you forgot to inventory them? All of that. Majority of the time, we are able to fix a lot of these items. So just make sure, get familiar with it, ask any questions if you have any, and know that that's going to be a huge part of your actual daily use of the system. Any questions? All right. And then just know your food, beverage, and retail systems all have their own usage report. Yeah, just a heads up, we are going to end very early today because I went over a lot of the stuff yesterday. So the next step is going to be under the food systems. I'm going to go ahead and show you the purchase report. So your purchase report, is all this is going to be is going to tell you how much you purchased of that specific item throughout the date range that you choose. Now, this is a new feature. We just added this funnel icon finally. But what you would want to do is, for me, I specifically use this because when I'm talking on the phone with my consulting members, sometimes we're trying to double check a specific invoice and I don't know that invoice date. And so I'll literally just change the date range. From here, I'll look for the product. And then once that product generates, I have every single time I purchased it, I can see my pack size, my weight, and how much I purchased it throughout in total throughout the entire date range that I chose. So you can see this is by Del Monte. I purchased 675. Wait, why does it? Let's see. Dollars of it. Yep. And then in total, I purchased a total of 8 cases of that, 80 pounds. From there, what I do is I just look, okay, so now I know that I have the invoice in the system on June 16th. I'll go into daily paperwork, open up June 16th. I then double check that invoice. There it is from Del Monte. I can scroll down and redirect back to the order and make whatever adjustment I needed to do. So that's all the purchase report is. It's super simple, and the majority of the time you're just looking at it to either find an invoice, to see if an invoice is in the system, or to look back at your history of a specific purchase item. All right, I'm going to go into the beverage systems and I'm going to show you key item report. Let me know if anyone on virtually watching this, if I'm talking too fast. But under the beverage systems, I'm going to go to key item report. So key item report is anything that you want to track on a daily basis. Now, I will say if you're going to key item something that's not by the each, that's by the pound. For example, that restaurant that I was just in, that beef fajita, we key item that report, but what I will give you a disclaimer with key iteming, anything that's by the pound like that, especially because that was a Mexican restaurant. So you could imagine how many different recipes that beef fajita is in. We had to create an Excel spreadsheet, list every single item that beef fajita is in, put down the actual weight amount of it, and that way they could easily calculate how much they're actually inventorying for each specific item. Under beverage systems, I went to key item report, and then the first thing you're going to do is click on create new report. This is a clipboard system, just like the prep sheet that I showed you yesterday. So that being said, the first thing I'm going to do is I would select shift as AM, PM, or day. But once I'm done, I'm going to go ahead and scroll down first and print off a blank PDF of this specific report. All right, once I go ahead and pull that report, and by the way, just to backtrack, if you remember about, I want to say it was yesterday, when we were adding new products, we had the option to select checkbox key item report in a recipe and products. That's what allows you to have it entered right over here. So what you would do is you would go ahead, this is a beverage system. So we would go ahead and hand this over to our bartender. You have 2 different options of going about this. You could go ahead and give it to an AM shift manager or AM bartender, and then a PM, and they'll have their both individual inventories to do. Or you can do the morning person counts the beginning inventory, the ending person counts the closer counts the ending inventory, and do it that way. So that's up to you. If you're going to do it the last way, which is basically having 2 or whoever's working that specific day have one key item instead of having their separate one, you can just go ahead and write down shift as day. And I would enter the date range. Once you write down the date range and the shift, you're going to hand this over to a bartender or whoever, and you're going to tell them that they need to inventory a specific item. So we're going to pretend like we're having trouble with our Bud Light 12-ounce cans. You will ask them to go ahead and inventory their opening inventory amount and their prepped or purchased. So if I received any Bud Lights throughout my shift, I would go ahead and write that down right over here. After that, if you're going to be doing it with 1 report per day, then once they're done with their shift, At the end of the night, you're going to have whoever's closing count the actual ending inventory. That's all they have to do is fill in the opening inventory, the actual ending inventory, and their prep to purchase amount throughout the day. Once they're done with that, they're going to hand this over to a manager, and then the manager has to go into your either RSP, and you can pull a daily PMix report, or they can go into your actual POS system if you're not integrated, and they can go ahead and directly pull a PMix report from there and double check how much they've actually sold. So you will have to have a manager enter the actual sold. Once all 4 columns are filled out, you can go back into the key item report and fill out all of the information. And all this does for you is do the math. So again, we're going to be looking at line 6. Our opening inventory count was 12 bottles. Throughout our shift, we went ahead and prepped or purchased another 24 bottles. And then I'm going to scroll to the right and enter that my actual ending inventory amount was going to be 24. After that, the last thing I have to do is enter my actual sold amount. So I've actually sold, oops, sorry, it's wrong. Let's just say I actually sold 6 bottles. If I actually sold 6 bottles, my ideal inventory should have been 30. And now that gives me a shortage of 6 bottles, which is $7.84. Now it's up to me to save this report using that floppy disk icon. As a manager, I'm going to go up to my employee or my employees and ask them what is going on with this specific bottle. So in the past, pretty much every single time I've ever shown anyone and had anyone do the key item report, they have been able to figure out the issue. The only time I've not had someone be able to do that is because they actually figured out that their maintenance, when they closed their doors, was actually stealing the bottles. But that's completely different. Yep, unfortunately. And I've also had a client that Fred was actually on ground, our CEO, and he heard a rattling in their wall. And so he saw a hole. So he looked in the hole to find bottles of wine or bottles of bottled beer, people drinking them during their shift and throwing them in the hole. Yep.
That's why we have lots of cameras.
Yep. All right, so that's going to be the key item report. It's super simple. And again, like yesterday, when we went over the prep sheet and the waste sheet, also I'd say the key item report, those 3 things are probably going to be the last 3 things that you do in the system. Just from my experience of working here for 5.5 years, it's typically going to be those 3 systems that we end with. Give me 1 second. Any questions or concerns? All right, what I'm going to be showing you next is going to be automatic par levels. So under food systems, I'm going to go back to food systems and go to automatic pars. All right, so under food systems, under automatic par levels. So just a heads up, this only works if you have history in the system. I'd say 3 to 6 months worth of history. Now, I will say I've had a member in the past, one member I've ever worked with that they had less history. I think they only had like a month worth of history, and we were able to look at the automatic par levels from there and get that entered in the system. But it's not going to be as accurate because you don't have the averages in the system. That's why we always suggest PMix report. If you're looking at a menu analysis, we're looking at 3 to 6 months to see your averages. What I'm going to do first is select the beginning and ending sales date. This is going to be your actual sales date, and this is going to be 3 to 6 months. Like I said, it doesn't have to be exact 3 to 6 months. So I'm just going to go ahead and select 3/1 to 6/21. On the right side, we're going to be selecting our beginning sales date and our ending sales date. So I want to go ahead and look at automatic par levels for next week and see what I'm going to be doing. I'm going to select the 15th through the 21st. Let's just say, for example, if I have a catering event, so our sales are a little bit higher, so I'm specifically looking at that specific week. Now, on the very right of that, you have two drop-down boxes. One is for category. Your category drop-down box, that's going to be which cost of goods sold category or which category in general you want to apply automatic par levels for. Unfortunately, I cannot do all of them at once. I can only do by each category. And then lastly, under vendor, we're going to select the drop-down box and select Cisco as my example and hit load. So please note these are automatic. So what that means is you're still going to have that human factor of having to go in here and making sure this information is accurate. Under product name, you have your product name column and it is grouped. The category name column, your vendor, pack size, your purchase unit price. This is the numbers used. So you do have to have inventory in the system. This is the number of units used throughout that period that you chose. And then this is your projected par level. So here's the thing. You can see that a lot of these are by the decimal. So that's going to be up to you. If, for example, Aladdin sun-dried tomatoes, can we go ahead and break a case of it since we only need 0.4 of a 6 dozen case? Or can we go ahead, do we want to go ahead and buy it all for right now? And that way, maybe if it's an item that sits in your shelf for a long time that has a longer shelf life, then we can go ahead and do so. So like I said, you will still have that human factor of looking at automatic par levels. Once you're done and you verify, you can go down the list and verify that everyone's par level or every product par level seems pretty accurate. You can go ahead and click on Update Product Par. Now, again, your product par levels are always going to be on your order day. If I order for Monday for Tuesday delivery, Thursday for Friday delivery, it's always going to be on Monday and Thursday. I'm going to go ahead and select Monday as my day of the week and click Save. Let it load. And then what you would do is now when I go into orders, I can go ahead and do an order, just like how I showed you yesterday. But the difference is I could go ahead and wait for it to load. I can select this type as inventory. I can select my inventory day. So especially because the specific restaurant orders for Monday for Tuesday delivery, we just inventoried on Sunday. So I can select for my date range, let's just say, for example, the 21st through 22nd, pretending like this day has already hit. And then the inventory day, I can select as, actually, that's a bad example. 1 second. So for the date range instead, I will select the 15th through the 16th, for example. And then what happens is if I go under the Cisco or whoever I added par levels for, you're going to see a couple of different things. One, you're going to see your automatic par level, your par level that you manually entered into the system. 2, you're going to see your on-hand count. And then 3, you'll have an order automatically generate for you, order quantity automatically generate for you. Again, it's still a human factor. If I only need, if I have 0.4 or 0.5 basically of the salt and my par level is set to 0.78, do I want to order another one or do I want to go ahead and wait till the next order? Also, my apologies, something I forgot to mention to you guys yesterday was this. You see how this item or specific items on this actual vendor are blue? So that actually means that it's just grouped. That's all that means. Also, one more thing I forgot to mention yesterday is if I scroll all the way to the right, under the pack size column, when I see, for example, tape, sorry, hold on 1 second. When I see, for example, tape or if I see ultimate potato wedges and there's a little arrow icon under the purchase unit column, I could click on that little arrow icon. And then if you remember yesterday, I showed you how to add a second purchase unit. That's how I can toggle. So I can either order a full case or I could order 10 pounds of it. And it gives me my price of $18 to reflect that 10 pound. All right. So that's how you generate automatic par levels and also automatically generate your order quantity in your orders. Let me just make sure something. All right, so you actually did go over import. So I only have one last section to go over. Did you want to take a 10-minute break, or do you want me to just are you okay with me continuing on? Okay, perfect. Just making sure. All right, so I have one more section to go over. So today's very, very fast, especially since all of these are reports, and the biggest thing I already showed you guys yesterday, which is orders. So the last thing that I need to show you, let me make sure I'm not missing anything new, is going to be under prime cost. Everything that we've gone over in the last 4 days generate under your prime cost. Give me 1 second. Okay. So under prime cost, you have a couple different sections: cost of goods sold, budget variance files, and end of month inventory. The first section I'm going to show you is budget variance. Like I said, everything we've done in the last 4 days, or the last 4 days, is for this specific report to be able to see prime cost on a weekly basis. My goal, especially with working with the 100-day members, is to get you on this prime cost report ASAP. So the first thing I'm going to be doing is, one, you're always going to be looking at prime cost budget variance 1 week behind. So as soon as the 14th ends, the first thing I can do the next day, or whenever my inventory has been entered, is look at my BVR report and my usage report. Your budget variance is going to be Monday through Sunday, or I'm sorry, Sunday. Let me double check. Yeah, Monday through Sunday, and then your cost of goods sold is Sunday through Sunday. So just a heads up. So this is how we actually read this report. And actually, give me 1 second, just to be realistic. I'm going to show you a real restaurant. All right, so this is one of my clients that I pulled up. So this is an actual restaurant. So the first section that you're going to see is up on the top, you'll have a PDF icon, export Excel, and this is a save icon. I have a lot of members that their bonus structure is based off of Restaurant Systems Pro. And what I would like you to do is, because it's based off of your history in the system, you want to go ahead and save it. So you would go ahead and click on save, enter the file name, and then what it does is it actually saves it under budget variance files. Basically, in the past, I've had a member try to hit their bonus when they shouldn't have. And so they went into the system and adjusted a bunch of numbers with the incorrect numbers just to be able to hit that bonus. Well, luckily was able to save the original report, but because it's a database, if someone changes something in a past inventory, it will update your BVR. That's why you just save it, so it generates under this report. No one can delete it besides the site admin. So that's that save icon. Comparing is if I want to compare 2 weeks side by side. And I actually do use that compare icon quite often. So the first section you're going to see is sales. I will say this is going to be probably the easiest report that you look at in the entire system. The first section is sales, and you'll see the projection at 62,500. That's going to be coming from your sales forecast. The actual is coming from your end of day report. This restaurant, this is the way I read it, was $13,393.48 over the predicted target at $75,893.48. Our food costs, scrolling down to our cost of goods sold, again, beginning inventory plus your purchases minus ending inventory to give you your cost of goods sold. This is going to be just a simple breakdown of it, just going to give you your actual versus your target. Your target comes from your percentage, and this percentage comes from your budget. If you do not have a budget, please let us know as soon as possible. Send us a P&L, 12-month P&L, so we can get that going as soon as possible. Under the actual, that's going to be coming from your beginning inventory plus your purchases minus ending inventory to give you that amount. Now, here's the thing. If I see a negative cost of goods sold under actual, a negative number here, what that means is your ending inventory is higher than your purchases throughout the week and your beginning inventory combined. All right, and you can see right now, This weighs each other out. In total, we're $344.25 under budget. Now, please know, I actually know that this restaurant is missing an invoice, so just a heads up. That makes a huge difference, especially for liquor, for example, since it was $904 under budget. They should still be close to target, though, either with that invoice, since it wasn't a large amount. So the next session is payroll expenses. Your payroll expenses is going to be a couple different things, actual and labor target. So if you remember, we went over the labor allotment. And I was talking to you about how this is your actual number and this is what's going to feed into the BVR report. Well, your payroll expenses, both of these numbers come from your labor allotment. That's why I was saying that no matter what you're doing, I don't care if you're not going to be using our actual scheduling systems, you have to be using the labor allotment at least to at least look at your actuals. So right now we're looking at, let me go back actually, hold on one second. Which week am I looking at? So it's the 15th. Okay, perfect. Just wanted to make sure something. Okay, so what I'm going to do is I pulled up the labor allotment. Right now, we're on the labor allotment for 6/15, but this is the actuals from the 1st to the 17th. So this means as soon as I enter my labor allotment for the 15th, this is what's generating under my actual payroll for this column. You'll see they match up completely for that reason. Now, here's the thing, that target comes from the week of the upcoming week. So you know how we're always looking at this basically 1 week ahead? Yep, and that's the reason why, because that's actually what's generating that target. So it's actually the previous week of, it would be the 8th. Oops, sorry, it would be the 1st. When I hit calculate, the 1st to the 7th, if you look at it, these are the actual numbers it allotted you, and those are going to be the labor target right over here. All right, scrolling down, and you can see that we are predicted to be hitting a 25.02%, but we've actually hit 24.46%. So I'm actually very proud of this restaurant, especially with having that much more sales than they were predicting. Now, department, this is just a breakdown of everything. Front of the house, back of the house, kitchen manager, catering, salaried managers, if there is any. This, besides your labor cost percentage in your labor allotment, is the only area where your salaried managers generate. Benefits, taxes, and insurance. This percentage is from your budget, typically around 15%, maybe I've seen 16, 17%, but typically around there. To give you your actual total payroll. In total, we're hitting a 28.13%, and that's $485.14 under budget. Lastly, our prime cost. This restaurant is hitting a 52.8%, even though our liquor is missing an invoice. Again, I'm still going to be predicting them because that invoice is only a couple $100 to be on target or closer to target. You can see they're hitting a 52.8%, and their actual target was 53.89%. So they deserve a pat on the back. All right. So that's going to be our budget variance report. Now, here's the thing with the budget variance report. Because our cost of goods sold gives you a simple breakdown, there may be some times, especially if your cost of goods sold has a negative, that you want to look at the cost of goods sold under prime cost. So all I have to do from here is under prime cost of goods sold, I can select my, again, Sunday through Sunday inventory. And then from there, let me actually select the same date range I just showed you. From there, we can look at these columns. Just for the sake of today's example, I'm going to click on this drop-down box and sort it to just food, so it's easier to understand and read. You have a compare icon, so you can compare 2 weeks with the cost of goods sold. You should have an average inventory amount. So that means that, for example, this inventory, you see how they start with $11,500 and ended with $8,929? That is a very large inventory change. Now, you don't want a large inventory change unless you're purposely trying to lower or higher your actual inventory amount. So just a heads up, that is going to be something that may throw off your system, because let's just say, for example, if we're always around $8,000 inventory, but all of a sudden our inventory is 11,500, there's probably something wrong with our actual inventory count. So just a heads up with that. So again, we have our beginning inventory plus our purchases minus our ending inventory to give us our usage. We have our actual sales amount, and we have our cost of goods sold percentage. So right now our budgeted percentage is 27%, but we're actually hitting a 26%, but we're actually hitting a 27.55%. Right now, our average inventory is $10,000. Our inventory change is $2,603.02. And with that amount of actual sales, we should have budgeted to use $14,622.02, but we've actually used $15,492.89. So our variance is $870 over budget. So that's what gives you the calculation here. The main reason why I look at this is so I can compare inventory and see their averages. So I can click on this compare icon, select the beginning inventory, ending inventory, and I'm literally selecting 2 weeks worth of inventory side by side, comparing it just so I can see what their average inventory is typically at. You can see for this specific restaurant, for 2 weeks straight, their average inventory was around 8,000. And all of a sudden, they were at 11,000. So did they bulk up with food because of everything that's going on with Corona? And I will say everything that is going on in this world right now, there is going to be, I guess, less of an average sometimes, just because a lot of people are trying to bulk up on meats. All right. So that's our cost of goods sold page. Do you guys have any questions or concerns about anything that we've gone over? You're good?
Well, I have questions, but I can.
Okay, no problem. All right. Okay, so this is going to be the very last part of our system, and then you guys are done with the classes. So under prime cost, I'm going to go to end of month inventory. If you're accounting with us, then we automatically do this for you. If you're not, you can go ahead and pull this for your bookkeeper, for example. So as long as you have history in the system, you're able to pull an end of month inventory. So the first thing I'm going to do is pull up my calendar. Right now, if I look at my calendar, the ending day of June is going to be the 30th, and that's a Tuesday. Well, our last inventory was on the 28th. What you're going to be looking for is what's the closest inventory to from your end of day. For this example, we have 2 of them. It would be the 28th or the 5th, but technically the 28th is closer to our end of the actual month. So what I would do for this example is I would go ahead and select June, for example. Then from here, actually what I'm going to do is, because there's no ending inventory in the 28th, I'm going to have to go back 1 month. So let's pull May. So I'm going to pull May, and then where it says choose inventory date, I'm going to backtrack to see when the 31st was. All right. My apologies, guys. May was actually on the last day of the week, and that was actually on a Sunday, so that already had an inventory. All right, so I will show you guys April. I'm so sorry about that. So with April, when I change the date range, you can see the last day is the 30th. I have an inventory on the 26th, but I also have an inventory on the 3rd. So which one is closer to April? And it looks like the inventory for the 3rd of May is going to be closest, so I would select that one. From there, I can click load. And then what it does is it takes that last inventory day, so for example, the 3rd, backtracks it, so it figures out that we had 3 prior days of inventory for the end of the month to give you this estimated end of month bulk inventory amount. So it's not by product, it's going to be a bulk amount. You'll see each cost of goods sold category. You'll also have your last inventory day and the last inventory amount, your usage, your sales throughout those days, the estimated order or the estimated amount right over here. Let me see if I can go ahead and minimize this. Estimated usage. And then we have our purchases. to give us our estimated end of month inventory. If this is accurate, then you would go ahead and click on add end of month inventory. And then from there, it will automatically add it into the system for you. Now, this was they are bookkeeping with us, so this is actually already done for this specific restaurant. Now, also, I just want to remind you guys that your bottled beer and your draft beer have completely different pour costs. So I will recommend that you go ahead and separate that in your POS system. Let me verify that we've gone over everything in the system, but I want to go ahead and make sure everyone understands that we are here to help you. We are here to serve you. So that means I don't care if you call us 15 times a day to ask a simple question. I am totally okay with that. Call training and technical support. Everyone should have my phone number in their email. Also, you have a chat icon that's open for 10 hours a day, and you have videos. You have everything that you need to succeed in Restaurant Systems Pro. If you have any questions or concerns, please reach out to me. But I wanted to thank everyone for coming to today's class in the last 3 days, and I hope you guys have a wonderful, safe weekend. Thank you so much, guys. Have a great day. Bye. By the way, I'm still here if you have any questions.